Good morning, good afternoon, good evening, and good night, depending on where in the world you are joining me from. I am Illuminati, and this is the Crypto and Cognac podcast show, as always, live every Thursday, 7 p.m. Atlantic Standard Time, sharp, right here on YouTube. And as always, if I'm here, you know Stevie in the comments, and you know Henny in the glass, right? So last week we celebrated our 200th episode of the podcast, which I mean still is crazy. It's crazy to me, but interestingly enough, I would have decided to live life a little, and I would have celebrated with a bottle of 200th anniversary Hennessy VSOP. And unfortunately or fortunately, I'm not quite ready just yet to go back to drinking VS or pure white. So I'm gonna have some VSOP again this week, right? So we're not gonna finish out the 200th anniversary bottle, but we still have that same goodness in this bottle. So pour yourself a glass. Yeah, you have a big glass today. And let's chop it up, right? As always, we got to do some housekeeping first. I am not a financial advisor. This is not a financial advisory podcast. No matter what the person on the other side tells you, there is no such thing as crypto Caribbean financial advice, right? It's all about information, conversation, education. The ICE rule, right? The same way we have our yak is the same way we have our crypto conversations. As always, we are just here to decipher this crazy cryptic world of cryptocurrency. So, drink, drive, and degen responsibly, right? Today, our discussion is a big one, right? And that's not hype. That's not just what's the word to call it? That's not just me trying to placate you all or talk BS. That is because some interesting things have been taking place in our world as it relates to crypto. And of course, we are going to chop it up, right? In the last couple days, what we have seen is that Fannie Mae has announced in collaboration with Coinbase that they will be accepting Bitcoin as collateral for mortgages. Now, why is that a big deal? The fact is, for years, Bitcoin has been labeled many things, right? So we've been labeled a speculative asset, a hedge against inflation, a store of value. But today, we are looking at something very different, right? Bitcoin as collateral for mortgages is not just, and that's not just within this niche environment of crypto, because we've had facilities that offered, Bitcoin as collateral previously, but this is real mainstream adoption. So, why is it important? Traditionally, if you wanted to buy a home, if you wanted to buy property, especially real world assets, your wealth needed and your wealth was tied up in Bitcoin, you had basically one choice, right? You had to sell your Bitcoin, convert it to cash, and then use that money as a down payment, right? Even during my time working full time in cryptocurrency, being paid in cryptocurrency, getting a loan was hell because the banks did not consider my income to be real because I was getting paid in magic internet money, right? Now, that prior circumstance that I just discussed, it comes with two problems, right? So one, especially if you have a significant amount of Bitcoin, you want to buy a mansion, you want to go hard, right? That comes with two big problems, right? First, when you sell, you lose your exposure to the upside that is Bitcoin, right? So especially, let's say you wanted to buy a house now while the market is down. I think we just hovering around 69,000 right now. We know that we have come down from a high of 126,000, and we expect that it will recover, whether it's this year, next cycle, to new all-time highs. So once you sell your Bitcoin, you lose access to the upside or the potential upside, right? Because no financial advice. But in most jurisdictions, you also would trigger a taxable event, right? So any gains, any capital gains that you would have made on your Bitcoin from holding it, especially like places like the US, you will be required to pay taxes on that. So that's two things. So you lose your upside to future growth in the Bitcoin, and you create a taxable event. Now, what this model is doing is basically changing that, right? So through a partnership, like I said, with Coinbase and some fintech lenders, Better Home and Finance, which is the lending arm of Fannie Mae, their new structure is that you keep your Bitcoin, you use it as collateral, and then you secure a mortgage alongside that collateral loan. So basically, you're using your Bitcoin as collateral, I guess, for the down payment. And then you use that loan, which is backed by the Bitcoin, to pay your down payment. And then you can access a traditional mortgage. So it's not necessarily that we're replacing the traditional mortgage system, but Bitcoin is actually like plugging into that system. And I think that distinction is actually quite important because, well, we'll talk a little bit more about that when I get to some of the concerns around it, right? But what I wanted to say first is that I think this has real implications for the future of Bitcoin, the future of Bitcoin adoption, the future expansion of the cryptocurrency industry. Because this is not just about buying homes, this is about wealth recognition. For the first time on a mainstream scale, we are seeing that Bitcoin, a cryptocurrency, not as an ETF, but spot BTC, is being acknowledged as real wealth by a significant financial institution in one of the largest economies in the world, the United States, right? And what that does, it allows for Bitcoin to become a productive asset. Now, for a lot of the people who have been critics of Bitcoin for many years, they have said that, you know what, Bitcoin just sits there. It doesn't create any cash flow. It doesn't create any yield. But now we are seeing an opportunity for the liquidity in the Bitcoin environment to be unlocked without having to sell it. So what that potentially translates to is people who have had and held on to their Bitcoin for a long time and finally want to access some of the value coming out of their Bitcoin, they don't have to put further sell pressure into the market by selling that Bitcoin to be able to enjoy some of life's, joys, right? And we encourage people to always, live, enjoy life. We saw a young billionaire, 43 years old, pass from cancer recently. We don't know when we're going to be on that flight. So we encourage people to enjoy life. But for the first time, you don't have to do that by just selling your Bitcoin and losing your access to that asset that you would have hodled for all these years. Again, like I said, that unlocks new capital that could now be reinvested, because most people in the crypto space are committed to the crypto space. So if people can now unlock that liquidity without having to sell their underlying asset, reinvest it in continuing to build this environment, build this industry, we are going to see tremendous amount of growth, right? And we're moving away from, paper wealth to real wealth that you could actually access. We have people in this crypto space who are billionaires, but billionaires on paper, because from the time they sell, they're no longer that, or they, depending on how much they're selling, once they're probably not going to be able to sell all of it at this current price, right? So I think this is huge. And I think one of the biggest benefits of this move is the institutional signaling, right? When an entity like Fannie Mae moves in this direction, others obviously will follow, right? And well, I mean, I've been talking about Fannie Mae, but what is Fannie Mae, right? So Fannie Mae, for those who don't know, is the Federal National Mortgage Association, and it is basically a U.S. government institution that doesn't lend directly to home buyers, but what they do, they buy mortgages from banks and other lending institutions. They package those mortgages into securities, and then they sell them back to investors. What this does is create more liquidity in the market to allow banks to offer more mortgages. And right, you'll know, I mean, I've had a discussion about the fractional banking system before, so refer back to that if you need a little bit more understanding about that. But because it keeps money flowing through the housing system, it allows for, like I said, a growth of the economy, because banks are now able to offer more loans, lower interest rates. And obviously, when such a significant player in the, not just the US mortgage market, but the global mortgage market gets involved and puts their support behind Bitcoin, you're going to see a lot more players fall in line, right? Banks are going to start paying attention. Regulators are going to start refining the frameworks. And then you're going to see insurance companies start assessing risk differently around Bitcoin custodialship and all these different things. So what it does is it not just gives us a foot in the door, but it gives us, I mean, I would say an arm, a leg, a torso in the door of this bigger financial system, right? And I've been saying it since the very first episode of this podcast. Adoption is inevitable. And this is exactly how adoption happens. It doesn't happen overnight, but step by step through integration, and then inevitably, we see adoption at scale, right? Now, the concerning part, right? We know that Bitcoin, crypto, we operate in a very volatile space, right? And we know that Bitcoin could correct by 5-10% in a day. We have had, cycle corrections of 50%, 70% drawdowns, and the entire market could reset. Now, imagine that volatility sitting underneath a mortgage structure, right? That creates even more risk, right? Because the risk of the underlying asset, which is the Bitcoin, is one thing, but the risk of the mortgage environment and the mortgage structure itself creates somewhat of a layered leverage. I don't want to say a tsunami, but it creates a situation that could become very, very volatile, right? And if we don't have to look far, we just had to look back to the 2008 global financial crisis, which was brought on by subprime mortgage crisis, which created the environment for Bitcoin to be created in the first place, to know that layering these risks can potentially pose disastrous consequences, right? So obviously, we want to ensure that we're paying attention, right? Because whenever a financial system starts expanding credit using new asset classes, it's important to pay attention. No, I'm not saying to panic, but pay attention, because innovation and risk, they are partners and they tend to travel together, right? So while we need to obviously have innovation, we need to be a little measured with our outlook on it. So in the big picture, I would say ultimately this is a huge win for Bitcoin, a huge win for crypto, a huge win for this industry, a huge win for adoption. And I feel very vindicated in my tagline after all these years: adoption is inevitable. So we will continue to keep an eye out for how this structure really evolves. When we get more details, either from Fannie Mae or from Coinbase, in terms of how when the rollout is going to be, how extensive the rollout is going to be, whether it's going to be a test situation first. Obviously, I think that is going to be the direction that they take as the responsible direction. So I expect that to be the direction that they take. And obviously, we continue to look forward. Hopefully, this influences some other jurisdictions to take a closer look at how they treat with Bitcoin as a tool of collateral for finance. I would love for that to happen here in Trinidad and Tobago. That way, people like myself use my little $100 BTC as collateral for a little sweetie or something without having to sell my BTC, right? But like I said, I feel a little vindicated, right? Because adoption is inevitable. But that's my time and that's my take. Guys, thank you as always for tapping in with me. Have a safe week. Have a safe weekend. Trinidad have another long weekend coming up this weekend. And then we have our next long weekend next week. So guys, be safe. Have some fun out there. Adoption is inevitable. Illuminati. OUT. Be blessed.